I'm Mario Martinez Jr., CEO and founder of Ingresso, and we are the creators of flymessage.io, the free personal writing assistant and text expander application. On each episode of this podcast, you will hear from sales leaders, practitioners, and influencers to help you grow your sales numbers at scale. So, get your pen and paper or iPad and keyboard and start taking notes as you're now listening to the Modern Selling Podcast. Ladies and gentlemen, welcome to this episode of the Modern Selling Podcast. And I bring you not another venture capitalist talking about pre-seed and seed rounds to how to help startup companies. I actually bring you one of the best out there in the market. We're talking about Peakspan Capital, a venture capital firm focused on the late stage growth companies who are really killing it, millions of dollars in ARR. And I've got with me today my friend, Mr. Matt Melymuka, who is the co-founder and managing partner of Peakspan Capital. Matt, welcome to the show, my friend.
Thanks so much, Mario. Really excited to be here. Appreciate you having me. I wish I was wherever your background is. It looks glorious. It looks like Turks and Caicos-esque. I'm sitting here in cold New York, but excited to be here.
Well, here's what I can say. When we go to raise our Series B and Peakspan invests in Ingresso, I'll be getting an office there. That'll be one of the requirements.
Amen. Deal.
I love it, man. Well, great. I'm excited to have this conversation. Hey, thanks for joining us. Do me a favor for all of our listeners. I know who you are. Obviously, I've been watching and talking with you for a long time, but just give a little background about yourself, and then we'll talk about why the heck are you here on a sales podcast in a moment. So do that, and then I've got a very special question that I want to ask you.
Absolutely. No, appreciate it. So I'm Matt Melymuka. I'm a co-founder and managing partner here at Peakspan Capital. We are a growth stage investment firm. And so we've got about $2 billion under management across 3 funds. We're investing out of a third fund that's a $600 million vehicle. We were founded and launched in 2015, so we're coming up on a decade old. Peakspan, there's a lot of different, hundreds, now thousands of investment firms out there. There's a lot of different flavors even within growth. So Peakspan Capital is a growth stage investment firm. We've got about $2 billion under management across 3 funds. Our third fund that we're investing out of actively now is a $600 million vehicle. We were founded in 2015, so almost a decade old. Our whole firm mantra is all about focus and specialization, hence why I'm on the Modern Selling Podcast. So for us, all we do is B2B software. When I first started investing and partnering with companies back about 15 years ago, the B2B software universe was, just focusing on that was kind of a narrow enough aperture that you could consider that a specialized or focused strategy. Fast forward to today, the market has become so massive and B2B software really permeates every element of daily life and business that we further segment and silo the universe within B2B to really try to focus and specialize and develop domain expertise so we're a really good partner with the companies we partner with. And so at our firm, you can lead and focus on as partners no more than 3 themes or subsegments within B2B. And so I lead our sales technology practice, our marketing technology practice, and our hospitality tech practice. That's all I do. And so I probably spend 50-60% of my time living, breathing, working with sales tech companies, reading the same rags that the entrepreneurs and operators that I'm looking to partner with are, in the hopes of getting really steeped, and even from, a first email from me or a first call, having a really strategic level of rapport versus, the classic associate reaching out to a company and saying, tell me about your business and tell me about your market. Here's us as a firm. So we try to flip that model on its head. So B2B software only, theme focus only, and then we only invest in what we call the emerging growth phase of company development. What that means is companies that have stripped away some of the binary risk levers associated with classic early stage venture. So you've got a real product, real customers, real revenue, really strong signs that there's a great market opportunity here, and you've developed a product and a solution that can satisfy a real acute pain point. Companies typically are, anywhere from like 3 million of ARR on up. We've gone lower and we've gone significantly higher, but kind of, I would say 3 to 7 million of ARR is the sweet spot. We're looking for companies that are capital efficient, that have, scaled to that level, typically on the back of grit, tenacity, blood, sweat, and tears, and not hundreds of millions of venture capital, which, really in my mind reflects a DNA that will permeate the business as far and as long as you go, no matter how much you raise. The last point that I'll note, and then I'll shut up about us, I promise, is philosophically, we're quite different than the classic venture capital firm. So we actually kind of think of ourselves and talk about ourselves as decidedly contra Silicon Valley. And what I mean by that is, over the last really 15, 20 years, there's been a lot of craziness in venture capital as an asset class. There's been some good and some bad in terms of investors and the implications on entrepreneurs. But what we've seen is, massive, in particular, early stage funds, multi-billion-dollar funds. And by virtue of managing so much capital at the early stage, we've seen a lot of companies that raise too much too quickly at too high of a price, and then they get pushed by their investor to grow at all costs. And in doing so, reintroduce a lot of operational risk into the business that can really desecrate the awesome value that you've created to date before the investor comes in. And so I can't tell you how many great, $2-3 million ARR businesses that we see that raise, a $40 million growth round and then are pushed to, double their sales team overnight, take their, ad spend way through the roof and blow up their unit economics. And then the business literally goes to zero. And so the scary stat in venture capital that I'll cite is, as an investor, you're measured by your returns on the top end, of course, but also by what's called capital loss ratio on the bottom end, which is for every dollar I invest, how much goes to zero. And the scary stat in venture, which is hopefully not much of a secret anymore, is that the average capital loss ratio in venture capital over the last 12 years is 35.4%. So if you invest $1, or if you invest in 10 companies, over 3.5 of those companies are literally going to zero. And it's not oftentimes just because the business is poorly run or anything like that. It's actually because the investor is running a portfolio and pushing all of them to grow way faster than they can palpably digest in pursuit of a crazy outlier outcome, knowing a lot of them will burn out in the process. And so for us at PeakSpan, we've invested in about 50 companies across our 3 funds, and we've only lost money one time. And so our capital loss ratio is about 1.4%. And that doesn't mean that we're the best investors in the world, or even that we're working with the best companies in the world. We're working with incredible entrepreneurs, don't get me wrong. But what that means is we are finding like-minded entrepreneurs, typically owner-operators that own a lot of their business. It's the first time they've done this. They're looking for a collaborative partner, and they are very pragmatic about what the business is today and what it can be. And we're aligning with them on an ambitious but pragmatic set of objectives and outcomes, and importantly, maintaining the optionality that they have at that early, $2-3 million stage to raise money. You can sell the company, you can get to break even. You should protect that optionality at each node of the journey in our mind. And so when we partner with a company, we will align on, hey, you're 3 million of ARR. How do we get to 10 in the next 2 or 3 years, and do so with good resilience? And then when we get to that first, we call it our first peak of value creation. We call ourselves PeakSpan because we think company development is multiple successive peaks versus trying to sprint up the summit on day one. When we get to that first peak, we kind of recalibrate, take a breath, and then decide what to do from there with more data to assert what the right thing to do is. And so, oftentimes that means raising a bunch more money. Oftentimes it means selling the company. Oftentimes it means getting to break even and never raising another dollar. And all those things are okay and should result in generational wealth for the entrepreneur and a good return for us if we're all kind of doing it in an aligned way. And we're not, again, pursuing that $1 billion plus outcome when it's way too early to assert that that's even possible, if that makes sense.
Yeah, it does make sense. Thanks for that thorough response. I appreciate that. This is all very interesting to me, of course, because I'm on the journey and the path, right? And this is my second business. First was the service, now it's technology. And first time doing fundraising, did our friends and family, did our pre-seed, and Today I just got our last set of docs, so I'm excited about that. So I'm very excited. We're taking it to the next level, and it's do or die. Either I'm going to fail or I'm going to succeed. One of the two.
Well, congrats! You're a brave man in overcoming your PTSD and talking to another investor after you just closed and talked.
Yes, exactly right. That's exactly right. But it's an interesting market, and I will say, and people have heard me say this before on my podcast and all the listeners, that I used to say the hardest thing I ever did in business was bringing together 7 small companies underneath one to form Legacy Vengresso. Now the hardest thing that I ever did in business was actually fundraising, and that has been a Herculean effort, and it's not as fast as I had wanted it to be, and unfortunately, the market is totally different. But we'll talk a little bit more about that. Do me a favor before I get too far ahead of myself. Tell us one thing that nobody knows about you, even if they're looking at any of their or all of your social profiles. And Matt, I'm looking for something juicy.
Something juicy. Oh man. Let's see. I've got, my wife is Cambodian. We have 2 daughters, a 3-year-old Luna and a 5-month-old Layla. And I will tell you, before I met my wife, I was a kind of mid-20s-year-old from Boston who had been to, I think, London and Spain once. And my wife is from Cambodia, grew up in Bangkok, and was incredibly international. And since I've known my wife, I think we've gone to over 40 countries together. So we actually forego giving each other birthday and Christmas gifts, and instead do 2 or 3 big trips a year. And now it's the 4 of us doing these trips. So big travel buff.
Hey, that's pretty cool. The hard part is, now that you've got the 4 of you guys, you said 3 and a 5-month-old?
Yeah.
Well, you've got the car seats that you got to travel with, the strollers that you got to travel with.
That's right. That's exactly right.
I remember those days and dragging them onto an airplane and having to plan, clothes and bags out. And oh my gosh, we went through many strollers. So that was a tough time. But as soon as they get out of diapers and they get into walking on their own, that 5, 6, 7-year-old face, it's a lot better. So travel is a lot easier.
I'll tell you one thing, and then we can move on, because I could talk all day about kids. I feel like it's taken over my life. I've become one of those dads that just everything I say is about my children. But we've actually been able to do no screen time for our 3-year-old to date, and so she doesn't watch any screens, which is awesome from a cognitive perspective, I think, but it's detrimental when you're on a 24-hour flight to Cambodia and you turn on the TV on the plane and she is uninterested and instead wants to play the entire time. So it's a blessing and a curse, because we can't just distract her with an iPad.
Wow, that is so obviously that was a conscious effort that you've made, yeah?
Yeah.
Very interesting. So I gotta ask, how then on a 20-hour flight are you entertaining? What are you doing?
Oh man, Dad is a very good storyteller, and it's a lot of coloring books and sticker books, and just it's anything that we can figure out. It's brutal.
Hey, I commend you for that. It's funny, when me and my wife, when she was pregnant, we would go to restaurants and we would see families, and no knock, this is you. Hey, you do what you need to do. But we would see lots of families where they would, have the kid sitting in the high chair watching something while they're trying to eat. And both my wife and I said we would never do that. And for the most part, we didn't do that too often. But we ended up getting there to the point where it was like, once you had both kids at 3.5 years apart, one was the toddler, one was the newborn. Like, if you wanted to eat, you had to do something. Like, do this so I could actually take 7 minutes to actually swallow my food. And you got to the point where you understood, why I personally do not agree with sitting there and having them watch the whole entire time. That's not my style, nor do I allow my kids to be on the phone, any electronics, anytime at dinner. We're very religious about eating dinner together as a family every single night. And that includes going out into restaurants as well. So you'll never see us sitting there on our phones, four people at a table. That just won't happen. But I do understand when they're at that early age, it was tough, man, because you just don't have that time to focus on yourself or even swallow food without getting thrown up. I want this, daddy this, tantrum that, too tired this. It was a lot.
Yeah, totally agree.
All right. Well, let's get into some meat and potatoes since your particular focus is around the sales and marketing space. Let's talk about some first before we get into the sales. Talk about some of the market trends that you're seeing broadly versus 2023. Now, you touched a little bit about that a moment ago, but let's dive deeper into some of those things.
Yeah, I will say, and look, I truly sympathize and empathize with the plight that you alluded to earlier of raising money, which you're just going through in a really tough environment. Look, I've been doing this for 15 years, and I will say 2023 is one of the tougher markets in software across the board that I've seen. There's an interesting business that called Profitwell that's kind of a private software company, SaaS metrics dashboarding business. And they actually do this thing. They have visibility, obviously, by virtue of their product into private software company financials. And they actually aggregate all of their clients. They have about 34,000 private software clients that they aggregate into what they call the Profitwell software, like SaaS index. It's a good barometer of, pre-IPO, earlier stage SaaS companies and how they're doing. And what's interesting is that aggregate Profitwell index, again, statistically significant, 34,000 companies, was growing 80% in early 2022. In early 2023, was growing 38%. And then in December of 2023, that Profitwell index saw a negative growth rate, -4% for the first time ever. And so by what I mean by all of that is you can see the trend down, and 2023 from that perspective was kind of definitionally a software recession, if you will. And so what we saw across the board was it was hard to sell software across categories. We saw a lot of businesses that pulled back the reins on spend, cut headcount across the board. And I think sales tech was no different there. Sales technology and just, sellers and sales organizations, broader go-to-market organizations were certainly impacted. We can get into some of that stuff, as we talk about sales tech specifically. But we saw it across the board. It was a really, really tough time. The one thing I'll say is, again, with visibility across 50 companies, the companies that we think reacted quite well to it, either in our portfolio or not, were the companies that, if growth was harder to come by, and that variable marketing expense and your sales team and SDR effort, if that return on that spend was not as efficient as you'd like it to be, and just growth was harder to come by, not because your solution sucks or anything like that, but because buyers were, pushing decisions or cutting back spend, or, just renewing or even downselling on their existing solutions. The companies that continued to grow, continued to spend towards an ambitious growth plan when that growth just wasn't there to come by and ended up burning a lot, we think were the ones that, were in a tough spot. And so for a lot of our companies, again, with the expectation and experience that growth was really harder to come by, and a lot of go-to-market spend was really less effective and less efficient than it's been historically, a lot of our companies pulled back just to be able to weather the storm, effectively. And hopefully, as we get into 2024 here, it's a bit of a soft landing, and things will rebound, and the purse strings will loosen a little bit.
Are you actually seeing that things are loosening, or are you hoping that they will loosen?
I'm hopeful. I like to think of myself as a hand-wringing optimist. I'm optimistic eternally, but I say, what can go wrong? That's kind of my MO as an investor. And so I'm eternally hopeful. I think we're seeing some good signs, and I do think things will get back and be a little bit better than they were in 2023, certainly throughout 2024. I think Q3 and Q4 last year in particular were really tough. So I think it's too early to tell, but I'm hopeful.
What's interesting to me is that when there's hard times, when the market is tough, we generally see pullback on spending for companies in almost all areas. The one thing that I've always struggled with is, why would a company pull back on investing in the sales organization? I get operational efficiency everywhere else in the business, but the part that actually brings in the revenue would be the sales organization. So don't not invest in sales, reinvest back into sales, but make sure you've got the right players on the bus. And I think that's really key to be able to build out a focus on, all right, we may be in a recession, we may be having a difficult time. And the other thing that I think an organization should do is we go back to our existing customer base and we look at, we've got modules, let's just say we've got 5 modules to sell, 5 products to sell. What's the average number of products that each customer is purchased or bought or is using? How do we drive usage of those products if they already have them but haven't started using them, so that that can drive ROI and stickiness? And number 2, let's assume you've got 5 and your average modules is two products out of 5 that you've sold to a customer. How do you go and focus on the upsell? And so reinvesting back into the sales organization is so critical and so key, but yet I see a lot of organizations pulling back everywhere, including in sales. The reality of where I think the biggest fat that can be cut at is cut the people that aren't producing or haven't produced in the last 12 months, right? Or if they're at that 80% mark, right? They're there at 80% of that number that you've set the goal at, and reinvest with tools and technologies, capabilities, and training. Don't cut that out, because that is the lifeline. What do you think about that? Did you also see that trend?
Yeah, it's a lot of good points in there that are worth unpacking. I think I totally agree with you, and I think there's a couple delineations to make. One is, are you actually letting people go, or are you just hiring less quickly? And so I think that's the first important delineation, where, you know, up until 2023, really, like I spent 2020, 2021, 2022, these 2021 and 2 in particular were like incredible growth years across software. And so people were like really, you know, really growing and really hiring aggressively and spending a lot on variable spend, and investing in, you know, go-to-market product roadmap initiatives that might have a longer term payout. And so what we saw, and what I think is smart, is to, you know, reevaluate the efficiency in particular of your variable spend. Maybe hiring less quickly for things like development and engineering that might have a longer term payoff. But certainly agree with you. And especially if you have a more enterprise focused sales model with a long sales cycle that has, you know, a longer time associated with getting folks ramped up to productivity. If you slash a lot of your sales team, then you're going to be at a tough spot, because when things come back, you need, you know, 6+ months for those folks to ramp. So I totally agree with that. The other thing I think that's important too, that we saw a lot of companies kind of elegantly, you know, navigate the storm, if you will, were one of the companies I work with is called Cordial. It's a large enterprise focused email marketing provider. They compete with Braze and Iterable and Klaviyo, but they're kind of upmarket to Klaviyo. And in the 2021 and 2022 timeframe, the messaging about the value prop was all about kind of revenue generation, driving personalization at scale to increase revenue. They really intelligently dovetailed and refined their messaging to be more about consolidation and cost efficiency when that was more in focus. And so I think, again, it's a little tone deaf when companies are hiring across the board as if it's 2021, spending aggressively on variable channels that aren't producing, and are preaching a message and evangelizing a message that's really kind of falling on deaf ears, to the extent that it's more based on revenue, when folks are focused on cost controls and, you know, maybe whittling down the increasingly convoluted tech stacks that they have in house.
Yeah, gotcha. Makes sense. Let's talk about a little bit about, since we're on this topic of the sales line of business, reinvesting. Can you talk about some of the trends that, especially since this is your specialized focus for your portfolio companies, some of the trends that we are seeing in the sales tech just more broadly?
Yeah, totally. And so I have the pleasure and privilege of working with a lot of great sales tech companies. I'm on the board of a company called Cognism that is in the sales intelligence space. That's actually a great case study, by the way, in our model. When we partnered with Cognism in 2019, they were about $2.5 million of ARR. Our first proverbial peak that we aligned on was, how do we go from 2.5 to 10 in the next 2 years? We did that, and then we recalibrated and decided to raise, and we've raised a lot more money since, you know, over $100 million. And the business will finish at over 100 million of ARR this year. So it's been a great growth story, but a great, you know, case study in iterative and incremental value creation, because raising $150 million was never the day one objective when we partnered. It was how do we kind of iteratively and incrementally build value. But it's through that experience and many others, I think the biggest trend I see that has been, emerging in my mind over the last really 5+ years is a shift from what I would describe historically as kind of an emphasis on sales-led to a shift on an emphasis to buyer centricity in terms of a lot of different things. And so what I mean by that is I think sales tech is a really interesting space. It's seen incredible growth, similar to marketing tech, the marketing tech kind of 10 or 15 years ago when it would like really kind of shot up quickly. And so we've seen like massive growth in new startups, tons of funding, new segments emerging, new competencies. And in my mind, kind of Gen 1 of the sales tech boom has been all about making your sales team more effective and more efficient at their sales motion, i.e. doing things that are descriptive and data capture and activity tracking, all these things to make your sellers more efficient at their kind of outbound motion. I think that's great, and that stuff is really important. And there's really elegant solutions that do that very well, like your solution, by the way, your fly message solution. What the negative byproduct I think of that is that we all feel it on our LinkedIn channels, et cetera. Like the batch and blast, impersonalized, like inundation that we all feel in email and LinkedIn. It's gotten so so offensive that it's almost like kind of the early days of pop-up ads. And so by virtue of all of that, I think that coupled with the trend that we see that a lot of buyers, and this, I think we also see this in our own, daily consumer life, are doing a lot of research independently on their own, before they, and gathering a lot of data before they ever talk to a seller at the organization they are potentially going to buy a product from. So by virtue of all of that, I think the role of the sales team and the role of technology enablement has shifted in my mind and is shifting from how do we supercharge and drive efficiency and effectiveness in our sales motion to how do we actually cater to what the buyer needs and wants and serve up in an unobtrusive way the best possible information at the right time in the journey to enable that buyer in a very buyer-centric way to make the best possible decision for them. And so I think that's a big trend and shift that we're seeing in sales tech.
I also would mention as well, and I'd love to get your opinion on this as well. Yes, today and yesterday, I was talking to two heads of sales, and one of the interesting things they mentioned was their real focus is on increasing productivity for the individual sales reps. So we've got all this tech, but has it actually helped the sales rep to be able to increase their productivity so they're spending more time on the selling motion as opposed to the administrative or the, I got to go here for that and here for this and do that for this, right? So in that regard, one of the things that I was talking to them about was with Fly Message, of course, our focus is on increasing the productivity, but making them smarter. And, one of the things that we found was the biggest time suck on a seller right now is the inability to be able to write well. And they spend the most amount of time on writing. And what we've tried to do on the enablement side is we try to templatize a lot of stuff. And as a result, what ends up happening is the sales organization wants to hit the easy button. And so as a result of having the template, they then don't personalize. So case in point, here this morning, you'll appreciate this. I received a connection request from an individual, and it was for fractional CFO services. Okay, so they're targeting me because I'm a small business. They know I don't have a CFO. All right, got it. So because of what you just said about being kind of like this spray and pray motion and putting out content, in my LinkedIn profile, you may notice that it says Mario in the first name field, Mario period. And the reason why I've added the period in and why we've been doing this to all the executives that we work with is because that someone has scraped LinkedIn and they automate you, they put you into a sequence. When you receive a message that says, hey, Mario, period, comma. And instantly, what a lot of executives are doing is putting emojis in front of their names, right? The unicorns, the rainbow, the this, the that. And so I decided to go with the inconspicuous route, which is the period. And it's very hard to tell and hard to see if you are not looking at it, in which case most sales organizations are like, let's automate the crap out of the data. Let's scrape what we need to scrape. Let's bring it into our outreach or sales loft or Apollo or marketing automation system. And then we start spraying and praying. And then we run these same campaigns using, great tools that are out there that run LinkedIn, mail campaigns as an example for targeting executives like myself. And so what you easily are able to decipher is who's the person that's taking the time to automate, or at a minimum, at least they've cleaned up their data, right? At least they cleaned up their data. And so that's one of the struggles that we're seeing, to your point, is that we're adding in a lot of technology, but with that technology, we're not making them smarter or solving the biggest problems that they need help with, which is being able to write. And we're not training the sellers about the whole entire loop and understanding the system and the process. Let me explain, and I'd love to get your opinion on this. For example, now that we moved away from a pure training company to a SaaS company with training as a service, right? One of the things that most sales organizations don't know, and for all of you leaders listening in, here's a little something. You connect with a buyer on LinkedIn. Boom. In most cases, most sellers either leave it alone, the connection, and they start emailing the individual. That's what most people do. In some cases, some reps go immediately for the kill and they want to ask for the appointment right there on the LinkedIn message. Both of them are wrong. Because the reality of what we're trying to do is we want to welcome that individual to the network by bringing them value. So I might connect with you, Matt. Let's just pretend you're a VP of sales. And I might say, hey, Matt, thanks so much for connecting with me. I appreciate that. By the way, I don't know if you listen to the podcast, but here's a 7-year-long running podcast. It's in the top 1% of podcasts globally for sales leaders. It's called the Modern Selling Podcast. And here's a great episode with, and I might pick out, the CCO of HP that I had on the show, right? So it gives some credibility, some credence right there. By the way, I'm curious, some of the challenges that we work with leaders on are getting more meetings, booking more appointments. Are you struggling with some of those challenges? That's all I'm doing. I'm going to ask a question to solicit engagement. And I'm going to bring something of value. Okay, now what am I looking for? What I'm hoping to solicit is that person responds back to me. Here's the secret right here. The moment that person responds, whether it's I'm sending it on Navigator or whether I'm sending it on LinkedIn, LinkedIn says, new connection. There's a message chain going on back and forth. So what I'm going to do now for the next 3 weeks is I'm going to take Mario's content and put it in front of Matt, whether it's a comment or a post. And I'm going to do the same for Matt. I'm going to take Matt's content and put it in front of Mario, trying to foster and build a connection and relationship. So what does that mean? Well, if you're prospecting on LinkedIn, then you better be commenting, which 90% of most reps are not commenting, and you better be posting, which almost nearly 100% of most reps are not posting content on LinkedIn. Why? Because what's going to happen is, while Matt's sitting on the toilet going through his newsfeed and scrolling down his newsfeed, looking at his newsfeed, if I was commenting and if I was posting, then Matt's going to see my content. And if it's something of value to that buyer persona, hopefully get in to click, which is the gift that keeps on giving. And so if you understood that, and this is where I'm challenged by, if you understood that, then you would understand the importance of training your people of how to properly comment, how to properly post content. But I think most sales organizations are just throw more email, put it into a sequence, make the sequence longer, and throw more cold calls. And they're not understanding the intricacies of this entire workflow, right?
Totally agree. Yeah, well said. There was a lot of interesting comments there. And yeah, and I do think it all comes back to buyer centricity, which is, you noted the first outreach thing is not, what I kind of think of and visualize in my mind is like the used car salesman of like, what do I have to do to get you in this car today? But rather, here's a piece of content that you, buyer, who is in my ICP and is not, a incredibly random prospect that I know nothing about, you might find this interesting. So you're starting with value, and then I think it makes all the sense in the world. I totally agree with the broad concept too of reminding ourselves that especially with the sales and marketing and broader go-to-market technology stacks becoming so convoluted and overwhelming, that it's paralyzing. Where, pick any stat you want, the average enterprise uses like 40 tools for sales and CRM. It's unmanageable. oftentimes they're not talking to each other in a cohesive way. And we're kind of forgetting what the end goal is, which is to drive a business outcome, and that technology is an enabler, not the end all be all, and an enabler of enabling your sellers to spend more time doing what they do best, which is selling, right? And so I think there's a lot of there needs to be some mindset shift as to what is the role of technology. And I think the best technology is that which kind of seamlessly extends into the existing workflow of your rep, versus being, another application or another system of record that you have to kind of log in and actually ends up being an inhibitor to you doing your job better. So,
yeah, appreciate that. Now, you talked about earlier a thought map overview. Explain that. What is it and how does it work?
Yeah, and so look, this is kind of taking a page out of your book, to be honest. So we think of ourselves as a sales team too, as investors. So we are selling a product. That product is our value add as a partner and our confidence in helping you achieve a great outcome. And a key element of our product value proposition is our focus and specialization, i.e., if you are a sales technology entrepreneur, there's a lot of, and you're a well-performing company, you're getting cold emails, like 10, 15 a week from investors that don't know a lot about your business. And ostensibly, hopefully, you want a partner who's going to be collaborative, who's going to be aligned, who's going to be, transparent, and who's really going to know your category and be able to help you there. And so I think a lot of investors across stages say that they're thematic. But the reality is that's usually bullshit, pardon my French. And the reality is that most investors are looking for a financial profile and then reactively slotting you into a theme and saying, oh yeah, we cover that theme. But the reality is the financial profile is what they're looking at. And so so saying you are a thematic investor sometimes falls on deaf ears because they've heard it before and it's not always true. So we spend a lot of time, we form, segment our team into kind of power eyes, and myself and three colleagues are the sales tech focused theme team. And we've been focused on the category for the better part of a decade. We spend a lot of time doing primary research, thinking about trends and market dynamics and segments, and producing content to show that we're actually thinking about the things, the dynamics that matter to you as an entrepreneur. And that, ostensibly we're actually focused on your subsegment and category. So this thought map series was the amalgamation of just a lot of thinking and research that we've been doing to try to show folks that we're thinking about this stuff and kind of highlight a couple areas. So we did a 5-part series. We released it with the folks at Pavilion on their blog. And we looked at each kind of one of the 5 installments, observed and examined kind of one overarching trend, and then 3 sub-themes or sub-segments therein, and about 15 to 20 companies in each of those 3 sub-segments. So we thought it was an interesting way to, force ourselves to put on paper and articulate some of these really powerful sales tech trends and themes that we think people are thinking about, to let entrepreneurs know what we're looking at. And then again, articulate in a much more nuanced way than the taxonomy of like a G2 or a Capterra, for example, what a subsegment is. Like sales enablement has 10,000 companies. We tried to get much more granular. One of the 5 parts, for example, was on value proposition articulation. And we looked at 3 subsegments, including product-led enablement, which is kind of a really interesting new category of interactive demo environments and just kind of dovetailing a product-led sales motion to, a heavy kind of PLG motion, as well as buyer-centric content. And so much more, again, nuanced, much more narrow themes that we just talk about to get folks to see how we're thinking about the stuff.
Interesting. So the message is lead with content, or lead to your solution with valuable content. Don't lead with your solution. Yeah.
Totally. Yeah. And look, we use it because if you're an entrepreneur and, you probably experience this yourself, you're getting bombarded with templatized outreach from associates that don't know anything about your business and don't take the time to write a personalized email. And instead you get an email from me and it's really bespoke. I write these emails myself. I spend a lot of time on them. And it's like, hey, I've actually written a little content piece about your category and featured your business on the logo page. would you like to talk? That's the first step. And it's a really strategic level of rapport. And it's not a pull exercise that I know you've been on the other end of, where you get on the phone with a junior investor and they say, tell me about your company and your market. I try to come and say, let me tell you about your business and my perspective on it, my experience in your market.
Now, that would be a very interesting investor conversation, as opposed to tell me about your business. And you're like, did you look me up before you got on this call? Do you even know who I am?
Yeah. It's just disrespectful. I think it's really disrespectful to entrepreneurs who don't have enough time to do that. And, and it's a very disjointed, relationship building process a lot too, where you're talking to a junior individual, no disrespect to them. And then you kind of like pass that first test and get thrown up to a VP and then a partner eventually. Like, we have, again, partners reaching out to companies and doing the first call and every call thereafter, because we're going to be the ones, working closely with you on your board, and just think it's the right way to do it.
Yeah, interesting. Good conversation here. We're running out of time, but I wanted to just touch on the role of AI and automation in sales tech. What are you guys seeing and talking about with your portfolio companies?
So yeah, AI is obviously one of the biggest buzzwords in technology and has been for a while. I'll tell you that we gravitate, and me personally, I gravitate a lot towards very pragmatic applications of AI that are outcomes-based and are not just slideware. Every company has an AI story. And I think, again, very pragmatic, focused, outcomes-based applications of AI are really interesting. I think the biggest impact that I believe AI, generative AI, large language models, but in particular, just any kind of AI-enabled platform in sales tech will have and has had on sales teams is we're seeing the emergence of, and you alluded to this a little bit, but the emergence of kind of full life cycle reps. And I think historically, you had kind of an SDR and you had a sales rep and you had a kind of a hierarchical team, pursuing with very specialized functions. I think the best applications of, AI and technologies that can not only ingest a lot of information like a best-in-class SDR would do, but then surface that information in a very digestible way to enable you with information and content in a timely way to have a great conversation, over time, I think makes the role of, certainly in the near term, augments the role of the SDR, and enables the rise of these full life cycle sellers, which are, folks doing everything from prospecting and lead generation through engagement and closing, right? And you can very clearly see a path to to a world where a lot of that is automated, including the creation of collateral and content to serve a specific prospect and engage at the right time. And so I think there's a lot of really interesting applications that are very pragmatic for AI, and we're seeing them in a lot of, we talk about a lot of those in that thought map series. So I think it's a really, really exciting time. And again, the key thing for us is, to remember that technology is an enabler. And at the end of the day, if it enables you to have a better conversation in a more personalized, engaging way, and, drive a better outcome and spend more time on selling and the human interaction, the human, dynamic therein, I think it's all goodness. So it's an exciting time for sure.
Yeah, I think one of the keys here to take away for me as sales leaders are listening in and sales reps is, in my mind, first off, you can't survive without AI. I think that's really important. And but AI should not be thought of as replacing the seller or replacing a selling function or replacing even the seller's brain. AI is all about augmenting the seller. And a great example is one of the products that we also discovered was within Fly Message was we realized that sellers were having a problem with creating content. And so as a direct result, marketing was not solving that problem. And sales leaders would say to marketing, and then marketing would say, well, let's put together an employee advocacy program. And then you can start sharing from our employee advocacy program. Well, that's great for marketing, but bad for sellers. Why? Because it's using the LinkedIn sharing API, and LinkedIn's going to throttle that visibility down. And so sellers would use it for 90 days, and then all of a sudden they would say, this doesn't work. I haven't got a single lead out of it. Okay. So we created within FlyMessage a product called FlyPost AI, which allows you to be able to write a social media post based upon any topic, and it would write it right there on LinkedIn so that you could turn around and publish it. Hallelujah. Okay, great. And so yesterday, we were doing a live onboarding for one of our large enterprise customers, and we were going through the mechanics or the anatomy of a good post. After we went through the anatomy of how to write a good post, train them on how to do that, then we said, all right, we're going to make this easy for you. Go to LinkedIn, click Start a Post. Now you'll see FlyPost come alive. Click Thought Leadership, put a topic in. And I had 35 people in the room, Matt, and all of a sudden, the brains went like this. And they were like, oh my God, I would never write anything because of how long it would take. Average time, 32 minutes. Now, in less than 9 minutes, I could have a post scheduled out, 1 or 2 in an entire week. And so that's about augmenting the seller, because what is the seller going to go out there and write and go research content? No, not at all. What the seller needs to be able to do is get that information out there and utilize AI to help augment their brain, add in color. And as I started having everybody review this post, is it right? Everybody's like, man, it's like 85% right. Like, I can add in a story here, I can add in a call to action, and boom. And that's now based upon the what AI can do is it can help us really increase the speed of how we engage. But augmentation, I think that's what we would need to focus on in the market.
Totally agree. I mean, that's an amazing example and such a powerful solution. I think it's just on so many different levels, but I totally agree with you. Technology is an enabler. It's supplemental. It's about augmenting your existing workflows and making you, better, faster, and make better and more data-informed decisions. And so I totally agree with you. It's a super powerful tool.
Man, it's been great talking to you. We've run out of time, but if someone wants to get a hold of the great Matt Melymuka, how do they do it? Is it through LinkedIn, email, Twitter?
Well, you're too kind. The great Mario. But first, I really appreciate you having me on. You guys are just such thought leaders, and it's a real pleasure. I love listening to your podcast and reading your content, and so really appreciate it. It's a pleasure and a privilege. I'm humbled to be here. You can email me at matt@peakspancapital.com. It's like spanning mountain peaks. I won't spell it all out. That's probably the best way to contact me. We're on LinkedIn.
And if you're looking for Matt, M-A-T-T, last name spelled M-E-L-Y-M-U-K-A, Y-M-U-K-A. So M-E-L-Y-M-U-K-A. Did I get it right?
You did. And you're one of very few. I my poor daughter, we joke that she's not going to be able to spell her entire name until she's about 18 years old. So
that's a tough one. It's a tough one. So make sure when you reach out to Matt, tell him you heard him on the Modern Selling Podcast. Please do not send a connection request that is a blind connection request. Click the connect button, add a note. It is not very hard, people, and say, Matt, I heard you on the Modern Selling Podcast. Matt, I got one last question for you, and that is your all-time favorite movie. What is it?
Oh, that's a good one. I would probably say The Shawshank Redemption is my all-time favorite. I will say that although I live in New York, I'm from the great city of Boston initially, and I do have a very soft spot for all of the Boston kind of thriller movies like the Departed and The Town and movies like that. If I'm going to drop my R's a little bit on this podcast, but probably Shawshank is number one for me.
There you go, Shawshank Redemption again. 260 plus episodes, and I think that is the all-time most favorite movie out of all of our guests. So for all of you listening in right now, hey, don't turn that dial quite yet. Listen to this very important message right now. Thanks for listening to the Modern Selling Podcast. Please do me a huge favor and give the Modern Selling Podcast a 5-star rating and review on iTunes. Oh, and don't forget, if you'd like to save 20 hours or more in a month and increase your productivity, go right now and download FlyMessage, that's flymsg.io, for free. It's your free text expander and personal writing assistant. Hey, thanks for listening in, and until the next episode, good selling.